Michael Burry, the investor who became famous due to the book and movie The Big Short for his negative bet on the US housing market just before the 2008 financial crisis, is now putting his money on the struggling Chinese digital titans Alibaba Group Holdings and JD.com. Although Burry's stance on real estate was distinctly unconventional right before the housing bubble burst, the market appears to agree with his projections this time around. This is in contrast to his outlook just before the bubble burst. Since Michael Burry placed sizable bets on Chinese stocks, today's video highlights his holdings of Alibaba and JD.com. So, to know all of his investments in detail, stay tuned until the very end of the video. According to the most recent 13F filings that Michael Burry has completed, he's apparently made a sizable investment in a number of Chinese enterprises that anticipate benefiting from the reopening of the country's economy. To name just a few of the many companies that are included in this category, we may mention Alibaba and JD.com. The size of these holdings, on the other hand, begs the question about why Michael has taken such a position and what his investing thesis might possibly be. Due to the fact that Burry engages in active trading, it is highly likely that his holdings may undergo transformations throughout the course of time and may have already changed since the filing was filed. To begin, let's look at the various stocks and shares that are included in Burry's portfolio, as well as how this portfolio has developed over the course of the last year or so. In addition, let's also consider how Alibaba and JD.com have grown over the years. Because Michael Burry engages in active trading, the positions in his portfolio are always susceptible to change. This is really because of the nature of active trading. According to the priority net file that he previously gave, his previous portfolio was composed of 6 investments, the great majority of which were defensive in nature. For example, he held stakes in defensive businesses such as jail management businesses CoreCivic and Geo Group. Even though he's divested his holdings of CoreCivic, he also still has a position in Geo Group, and as well as this, he had a large interest in Aerojet Rocketdyne. This company specializes in aerospace and defense. His stock portfolio today has a wider exposure to overseas markets and a greater diversity of companies represented within it, and it appears to be less conservative than it was in the past. Although Burry still retains an interest in Geo, the share of the firm's overall holdings that he controls has diminished. He's replaced that investment with stakes in more speculative companies such as the software company Black Knight, though he still does have an interest in Geo Group. On the other hand, his most well-known investments are in Alibaba and JD.com, which, as we've mentioned, provide large exposure to China and are less defensive in nature. Both of these companies have gained a great deal of notoriety because of their investments. He has purchased interests in other companies that expect to gain from China's reopening, such as MGM Resorts, obviously the resort-type markets and casinos, and SkyWest Airlines. These companies, SkyWest Airlines and MGM Resorts, are involved in some aspect of the travel and tourism sector, which indirectly might benefit from the type of economic reopening that Burry anticipates within China, because as travel resumes, more people will need to fly in order to get to these various destinations. So why invest in Alibaba and JD.com in the first place? Well, due to the fact that Alibaba and JD.com and MGM share a significant number of the same macroeconomic and microeconomic characteristics, let's concentrate on the Chinese companies. To begin with, both businesses have been involved in controversies involving their respective management teams. Yet this pattern has shown some signs of diminishing at Alibaba, at least over the course of the past few years, and this is a positive development. Both businesses have been dealing with the fallout from the scandals, and this has been taking place for a considerable length of time. As a result of the filing that Burry made with the Securities and Exchange Commission, it was revealed that during the previous quarter he increased his interests in Alibaba, JD.com and MGM Resorts. The well-known investor from The Big Short was rumored to have spent $4.4 million to purchase 50,000 American depository shares of Alibaba. These shares are also known as Alibaba shares. In addition, he made a purchase of 75,000 American depository receipts from JD.com immediately before the end of the previous year, which had a total value of $4.2 million at the time that the transaction took place. Although these are traded on American stock exchanges, American depository shares and American depository receipts reflect ownership in foreign firms that are listed on other exchanges. Both of these financial instruments are referred to as depository receipts. Alibaba and JD.com have both carved up a strong position for themselves as the leading companies in China's online purchasing sector. As a reaction to rising interest rates and the possibility of a recession, there has been a widespread flight away from high-risk technology enterprises over the course of the last year. This flight has been driven by investors. As a direct consequence of this, the share prices of both Alibaba and JD.com experienced significant declines gains over the course of this time period. When Burry made his investment in the two companies, it's likely that he, as a value investor, believed that the stocks of the two companies had been oversold and were on the verge of a rebound. If so, this would explain why he made the transaction, and it looks as though he's been proven correct, if that was his thesis. Recently, the entire value of Scion's stock portfolio in the United States has reached approximately $47 million. This is a reflection of a 13% gain in the number of holdings, which increased from 6 to 9 over the time period. It's possible that Burry's most recent buys are a sign that he maintained his upbeat attitude during the most recent quarter, and this may be the case if they are. A number of warning signs were triggered when it was also discovered that he'd merged all of his interest into a single stock during the second quarter of the previous year, that's 2022. Which was Geo Group, of course. I've done a previous video on that. Despite this, during the third quarter of 2022, he added 5 additional names to his portfolio, so expanding it. Burry's issued repeated grave warnings to investors all year long, which may be a reaction to the wild run that the stock market has been taking over the past few months. Although putting bets on a tiny number of companies, Burry has placed bets on a total of 15 or so this year. In the latter part of the month of January, he provided his recommendation in the form of a single word: sell. Also, he's advised investors to steer clear of meme stocks by drawing parallels between the surge in market value that has been observed this year and the rise that was witnessed during the dot-com boom. The book and movie The Big Short center on Michael Burry's wager of $1 billion or so on the housing boom that occurred in the middle of the 2000s. He also made pessimistic predictions regarding the impending collapse of markets and the calamity of the economy following the COVID shutdowns. He's well known for investing in GameStop before it became a meme company, and for betting against Elon Musk's Tesla and Cathie Wood's flagship ARK fund over the course of the last 2 years. What are some of the driving factors behind Michael Burry's investment decisions when it comes to Alibaba and JD.com though? Well, one of them is resolving leadership issues. Jack Ma, despite his brilliance, has been a controversial figure in China. He has been criticized for being too critical of the Chinese Communist Party and for amassing an excessive amount of power. This is despite the fact that Jack Ma is one of the most successful business people in China. The fact that he's recently made the choice to move away from direct involvement in his enterprises, which of course includes organizations such as Ant Group and Alibaba, is excellent news for those companies. Second, we're up to date on the most recent technological advancement, and the upheaval that has been surrounding the management of JD.com appears to have calmed down somewhat. The screws are being tightened in China. What do I mean by that? Well, let's look at the Chinese tech crackdown. China is cracking down on internet companies that have an excessive amount of monopoly power, violate users' privacy, or exploit their customers in any way. It's taken very seriously by the EU, as it should be by the US, where anti-monopoly laws exist, where corporations that abuse their customers should be avoided, and where privacy restrictions should be avoided. Because China is apparently doing the same thing to avoid privacy offenses, Alibaba and JD.com need to delist from the market in the United States. Nowadays we can see why. The training that China has received to prevent enterprises from acquiring an excessive amount of monopoly power is, however, bad news for these companies, because it would appear that the public's awareness of China's tech crackdown has decreased. Alibaba and JD.com are reaping the benefits of the relaxation of the tech crackdown, but the authorities in charge of regulation are working to improve the financial markets. As for how we understand the auditing procedures, there's a dilemma with auditing, namely the dispute around whether or not China will allow access to financial reports or order distinct natural reports to regulators and accounting firms based in the United States. This is a problem due to the fact that the United States has threatened to delist companies that did not disclose proper financial disclosures to the United States. This would have a direct impact on businesses such as Alibaba and JD.com, which are traded on exchanges in the United States. After that, let's look at valuations. We'll talk about how things are right now with regard to assessments of valuations. Burry has investigated valuations, particularly in Hong Kong, which have a less significant impact on JD.com and Alibaba due to their lower numbers and comparable price fluctuations. Michael Burry provided an explanation in which he stated, "Meet the new boss, same as the previous boss. The Hang Seng recently hit in 1997 levels 25 years. Note, 3 of the last 4 premiers have served 3 terms. In spite of earlier assertions to the contrary, the final statement confirms that Xi Jinping was successfully re-elected to his position as president and that he's eligible to serve a second term in office." The tweet that Michael Burry posted reveals his level of comprehension about this topic. Burry is contemplating taking a bullish stance on China-related businesses due to the fact that many Hong Kong companies and firms were exchanging at low multiples at the time. The concept that some of these firms are undervalued in comparison to their historical precedent and are, as a result, great investments may be the impetus behind Burry's line of reasoning. It's up for debate. Finally, we have the issue of China's reopening. The reopening of markets in China is good news for the expansion of the country's gross domestic product and consequently for a large number of Chinese businesses that are dependent on that growth, such as Alibaba and JD.com. Take this particular instance as an illustration of what I mean. China is making great strides towards openness, including mandating students to study overseas if they want their degrees to be validated within China. This is in spite of the fact that there are global headwinds and worries about whether China will fulfill its economic growth targets. So this is how Michael Burry increased his holdings in Alibaba and JD.com over the course of the last quarter. The Big Short investor may have seen an opportunity in battered Chinese technology firms, and subsequently he swooped in, he traded out of all but 2 of his US stock holdings. That's all for today's video, and thanks for watching. Before you leave, make sure to subscribe to my channel and turn on any notifications so that you never miss any updates. Until next time, take care and stay tuned.